Hi, everyone. It is Friday, January 10th, 2025. Happy New Year. I'm Andrew Flowers, the chief economist at Appcast. Let's dive into some labor market insights. This morning, we just got the jobs report for December 2024, and we saw that the U.S. labor market ended last year on a very strong note. Job growth was steadily cooling throughout the year, but remained positive, and unemployment was low as inflation receded as a threat. So now what? With the new Trump administration set to take effect later this month, it's unclear what impact policy changes to immigration, trade, and taxes will have on the year ahead. Let's just recap the December 2024 report first. The economy added 256,000 net new jobs. You see that here with the blue column. And the unemployment rate was basically unchanged at 4.1%. For 2024 as a whole, the labor market added about 186,000 net new jobs on average each month. That's quite steady and quite strong. In terms of the industry mix of job gains, for most of the past 6 months, job growth has been strikingly narrow, if you will, concentrated in healthcare and construction and government employment. And healthcare was strong once again in December, as you see here. But gains in December were more evenly distributed in that month. So retail grew by 43,000, leisure and hospitality also 43,000, professional and business services gained 28,000, and all these were significantly above their previous trends. Now I want to talk about two big picture trends for the year, something to watch. First, let's call it the Great Stay. And by that I mean churn in the job market is very low. So you see here three different metrics. For employers, they are hiring and firing at very low levels. So the first rate, the higher rate, is quite low at 3.3%, and the layoff rate very low at 1.1%. But it's also the Great Stay and less churn on the job seeker side. We see that quitting by job seekers has fallen off dramatically. That last line here is at 1.9%. That's very different from the heyday of the Great Resignation just a few years ago. So this chart helps explain the disconnect between the strikingly strong job growth in 2024, as I just showed you, and then on the other hand, this accurate feeling that I think a lot of people have that it's hard for those looking for a job to land one, given that hiring is so low. And that leads me to the second big picture trend I want to mention, which is this split between the haves and the have-nots. It's really a difference between a striking difference between those who have a job right now and how confident they should feel, right? As I mentioned, layoffs are low, wage gains have been growing faster than inflation. But you contrast that with the have-nots, which is that for those people unemployed and looking for work, their job finding rate is really sharply declining. Throughout 2024, you see here, this chart is showing you the job finding rate. In a normal month, the odds of an unemployed worker landing a job is around 30%. But as of December 2024, that has fallen to 24%. That's the job finding rate. And this has been hitting younger workers like new college graduates or students looking for internships. It's been hitting them especially hard. So that's the second trend to watch for 2025. The last thing I'll mention as we wrap up is recruitment marketing cost that we track here at Appcast. Our kind of benchmark metric is cost per application. And about a year ago, we wrote that we thought 2024 was going to be pretty beige or boring. And I think that's panned out to be the case. You see that throughout most of 2024, the median cost per application to acquire an application was about $17 or so, and that was pretty steady, pretty flat. So what do you all in talent acquisition, if you're in recruiting, have to look forward to in 2025? As I mentioned, focus on the healthy job market, but the split between the haves and the have-nots, and the notion that we're in this kind of low churn or great stay environment. Finally, I just want to reemphasize what I said at the beginning. Focus is going to shift this year from macroeconomic forces like the tight labor market and supply chain bottlenecks, driving inflation. We've lived through that the last few years. This year, I think the focus is really going to shift in the labor market to the new Trump administration's policy proposals. So immigration, trade, and taxes could all change. Those policies could change this year, and that's going to have a big influence, a bigger influence than inflation and interest rates on the job market. So with that, stay tuned for more insights from Appcast and Recruitonomics, and Happy New Year.